Hello, you're watching Proactive. Joining me is Paul Welsh, the CEO of Nostra Terra Oil and Gas. Paul, very good to speak with you again. To start, could you give us an intro to Nostra Terra for those who are not familiar with the story?
Sure. Thanks for having me. Great to be back. So Nostra Terra is an onshore U.S. producer, relatively small cap, UK listed. Our primary assets are in East Texas in the U.S., and then we have a few legacy assets in West Texas and in South Texas that we're currently selling. I came on board about almost 2 months ago now, after having been a board member for the better part of 2 years. So I came on board, and since I've come on board, we've kind of revamped the company. We've done a number of things. We've focused on our producing assets, and we started to sell the assets that we didn't make any money with. So we went through a whole restructuring process where we looked, is something making money? Is it not? If it's not, then we're going to move it on. Even things were making money, were they making a sufficient amount of money to for us to keep, and if we got rid of them, would it cut our overhead? So we did a kind of a complete revamp of the company. We also changed the board members as well. So since I've come on board, we've changed the board, we've cut our G&A by a substantial amount, and we've really focused on generating cash from our primary asset, which is in Pine Mills, a field that's about 100 miles east of Dallas, that the company originally purchased in 2019, but hadn't really invested any money, substantial money into it, subsequent to that acquisition. And so the money that was generated from the field was used to buy other assets and look in other parts of the world, kind of a geographic expansion rather than a cash flow or production expansion. And so we're kind of changing that narrative, and we're putting money that the field is generating back into the field to increase its production. So that's kind of us in a rather long nutshell, I'd say.
Paul, you just raised £450,000 in a fundraise. Can you tell us what the proceeds will be used for?
Right. So we just did a fundraise, and so that was essentially to return idle wells to production. So we have 11 wells that are capable of producing. When the field was originally purchased, there were 20 producing wells. We're down to 9 now. And so there's 11 idle wells. And so we've reviewed those 11 wells, and the first 6 of those that have the most potential, we're going to return to production using the funds that we just raised in the last few days here. And so when we return those wells to production, that'll increase our daily production by plus or minus 50 barrels a day. So over the course of a couple of months, we'll increase production. And in Pine Mills, we have a net back of roughly $40 a barrel at $75 Brent, which is where we are today. So, if you take 50 barrels a day times $40 a barrel, you're looking at increasing your revenue almost $2,000 per day. So that adds up over time. And so that's the purpose of this, is to, get this money back into the ground, return these wells that have been sitting there, just waiting, for this money to be invested in them, and then generating, the cash we know we can from that, and then putting, again, that money back into the remaining 5 wells to return those productions. So we think it's a good use of funds. It's something that's been needed for quite some time, because over the course of 5 years, these wells have just come off production, and some of them have been idle for more than 3 years. So again, it's the idea of just basically investing in our primary asset and generating cash from that.
Paul, what can we expect to hear from Nostra Terra over the next 6 to 12 months?
So 6 to 12 months, I think we're going to hear the story of more wells returning to production, and then we're going to hear because we think we have about 85 barrels a day that are idle at the moment. So the field's making plus or minus 70 at the moment. Prior to and restarted these wells, we think we have about 85 barrels that we can return. So we can see a doubling of production, and when we double production, our cash flow increases by almost 6x because our costs don't change, right? We have a facility, we have a staff, we have everything in place. So the majority of that revenue just drops straight to the bottom line. So we see a significant increase in cash, which is important. In addition to that, when we picked up this field in 2019, there has been a 3D seismic program that was shot in 2018 that covered a big portion of the field. And that 3D has not really been looked at in detail across our field. And so back in January, we started a process where we farmed into the 3D, and now we're looking for opportunities. And the reason that's important is that in 2022, a company called Cypress farmed into 80 acres which is a small portion of our field, drilled 2 wells, the Falk 1 and the Falk 2, and those wells came in at 120 barrels a day each, right? So the field itself is making 75, one well in Falk is making more than that. And so what we're doing now is looking for other Falk-like opportunities. We definitely see one. We think we have up to 3 more out there. But I think the more important point is that when the field was originally developed back in the 50s and 60s, some 70 years ago, it was developed, with bad quality 2D seismic. Now we have good quality 3D seismic. So a lot of the well locations and the placement of those wells, we think can be optimized. So we do see upside in the existing main body of the field looking at this 3D. And the other thing too is that there are 4 horizons in the Pine Mills field. The majority of the production has come from one of the 4. And so all wells have drilled these 4 horizons. So we have the ability to go back in and look for opportunities that haven't been completed in the past. So I think we're going to hear a lot about Pine Mills, which is what I've been talking about today, but a lot about the technical, I think, understanding and improvement in the operation in that field. And so, anything that we do here is relatively cheap because the wells, a new well is less than $1 million a dry hole, and recompletion is, $15,000 to $30,000, and so one of those, recompletions can add 20, 30 barrels a day. It's a very, very profitable piece of business. So it's not exciting. It's not, we're not drilling, deep water offshore wells, but it's one of those things that really makes a difference, to the company, because the revenue stream, again, it's important to us because of this fixed cost element we have. The more revenue we can generate, the more barrels we can produce, the more profitable the company becomes, and kind of that's our focus over the next 6 to 12 months.
Finally, Paul, why should investors be excited about Nostra Terra?
I think it's being invested because it's a new team, new energy, and there's a lot of new opportunities out there. I mean, I think from my perspective, what gets me excited is the Falk opportunity, because this was a field that was discovered in 1949, and in 2022, 2 new wells were drilled in the main part of the field, and they came in essentially at original reservoir conditions. And so with the 3D seismic, we have a new interpretation of the field, and I think we're going to see a lot of opportunities like that. So, a small fault block that hadn't been developed originally, that has production that come in at 120 barrels a day. Now, that has changed. When the original Falk wells were drilled, there was a limit on 80 barrels a day, and now we can produce these wells at 50% higher rates, 120 barrels a day. So those wells pay out in something like, depending on the oil price, but less than 6 months. And so, for us, that is a huge addition to the revenue stream. And we really think that will turn the needle. That'll make a big, big difference in the story going forward, is these new opportunities that aren't probably new to the field. They've been sitting there for 60, 70 years, but because we didn't have the 3D seismic available to us, we couldn't develop them. Now that we do, we can do the technical work required to find these opportunities and put them on production relatively cheaply. I mean, some of them will just be recompletions, and that is something we can do out of existing cash flow. So we're really excited about that. So I think it'll be a lot of Pine Mills. I think it'll be probably a word people will get tired of hearing, but it's the opportunity in front of us, and I think that is exciting, and it can generate revenue, and I think it can really make the company something that it hasn't been in the past, which is something that's growing, increasing production, and generating cash in excess of the expenses, which is important. So I think that's what the future looks like for us.
Well, Paul, I hope you'll keep us posted on any progress. Thank you very much for the update today.
Thank you. Thank you for your time.
Thank you. That's Paul Welsh, the CEO of Nostra Terra Oil and Gas.